Joining us now, we've got Mark Mobius, co-founder and partner at Mobius Capital Partners. He's joining us right now on the show. Mark, thanks very much, and good morning to you from India. We're talking about emerging markets now. We've got a situation where prices are depressed, valuations are correcting, and there is some amount of economic distress across the board. Would you characterize emerging markets right now at being at its weakest, or there is more pain left?
I think depending on the market, there is more pain. And you look at some of the markets like Brazil. Actually, Brazil is up quite significantly on the back of the recent election. So it's really a stock picker's market at this stage of the game, where we have to go into different countries and pick stocks on the basis of their fundamentals rather than just looking at the overall index. In the case of India, that's particularly true. As you know, the market is down by 16–17% from the high point this year. I think it probably has a little bit more to go on the index, but if you look at individual stocks, there's some great opportunities.
Right. So as a market, what's your pecking order within the emerging market basket? Do you stack India amongst the top two?
Yes, India is right up there, and Brazil is the other. Brazil and India are the two of the large markets we're focusing on. But then of the smaller markets, countries like Turkey, Mexico, Korea, Vietnam would be one of the frontier markets that we're looking at. Those are the ones that we would be particularly interested in now.
Mr. Mobius, good morning. If 2017 was all about global GDP growth helping all the export-oriented nations do well, 2018 now is starting to turn the corner around. Global growth is showing signs of slowing down. Maybe the US GDP might do okay, but the other markets not quite sure of. Do you think EMs can perform well and export-oriented economies can still perform well in that light?
Yes, I do. The reason why I say that is that, as you know, the U.S. market is on a correction mode now. And I believe the U.S. market probably has more to go down. We've seen this long bull market in the U.S., and now we're seeing a significant correction. When that happens, of course, money begins to flow out of the U.S. market. And where does it go? It has to go to overseas markets. And that includes, of course, emerging markets. And we're beginning to see some of that flow already taking place in a small amount, but still it's a trend that I think will continue. And of course that will benefit some of these markets, particularly those markets that are down significantly where there are lots of bargains. There will be bargain hunters looking at those markets, particularly India.
Oh, interesting. That's music to the ears, Mr. Mobius. Just one small question. Once playing the devil's advocate, if you will, the bear camp would say that the U.S. economy, while the markets may have come off, the U.S. economy seems, if not red hot, then reasonably hot, and the wage growth out there might lead the Fed to hike rates at a much faster clip than what the Fed itself estimates right now. And the Fed has said it'll be data dependent. Should we have a faster trajectory of rate hikes, would that mean more fund outflows from the EMs, and could that spoil the party a bit?
Not necessarily, because you've seen rates in the emerging countries going up as well. Because these countries want to defend their currencies, and they've reacted to what's happening in the U.S. So as U.S. rates go up, everybody else raises their rates as well. Now, I'm not saying that's necessarily a healthy development for many of these emerging countries, particularly India. I'd like to see lower rates. But the reality is that the currencies will then be protected. It won't go down as much as the U.S. dollars going up. So I think there'll be a move away from dollars as a result of correction in the U.S. market, and as a result of a topping out of the U.S. dollar strength.
Mr. Mobius, what do you make then of this last 2 months of outflows that we've seen from key emerging markets? India, for all its positives, the last 2 months has been badgered on the fund outflow front, October being arguably the worst month in the calendar year thus far.
Yes, of course, there's no question that people have reacted to what's happening in the U.S., expectation of higher rates in the U.S., but I think going forward it's going to be a different picture. A lot, by the way, depends on the reforms that Modi government is continuing to implement. I think that will make a big, big difference. For example, allowing money to come into India is now something that the government has to pay attention to. I know in our case, our funds have had to wait 6 months in order to enter the Indian market. That is much too long, and the government has to implement reforms to change that situation.
Mr. Mobius, to make an investment call, liquidity is one of the key variables to look at. So while making an investment call and choosing your country to invest in from the emerging market basket, where liquidity at this current juncture is a little bit thin versus what liquidity is in the US, how does one take a call based on that? Because in India itself, there is a slight bit of a squeeze.
Yeah, there's no question. Liquidity is critical in many of these markets. Of course, in our case, we do look at small and medium-sized companies as having some really good opportunities, and liquidity is limited in those countries and those companies. But we feel that if you're a long-term investor, liquidity is no big problem, because if you're making the right selections, the prices will go up and liquidity will follow. So it's something that is sometimes an advantage if you're able to buy cheap stocks that have relatively low liquidity but are going to increase the liquidity going forward. But there's no question that the big markets get more of the money because of liquidity.
Let's talk about the other factor which is weighing down and rattling investment sentiment, and that's the trade war. And a full-blown trade war between China and US obviously is going to dampen sentiments across emerging markets. Currently, we are seeing growth rates coming off in China as well. Third quarter GDP print was a little bit on the lower side at 6.5%. So the fourth quarter number is going to be immensely important. According to you, what are the implications and the repercussions of a full-blown trade war?
A full-blown trade war between the U.S. and China, I believe, will have a beneficial effect on a number of other countries, including India, because a lot of the exports now coming out of China will be switched to these other countries. Vietnam is a good example. Vietnam is now a major exporter of shoes, sport shoes, to the U.S. and the rest of the world. A lot of that manufacturing has been already transferred to these other countries, and I believe that's going to be implemented going forward. Mexico, for example, will be a beneficiary of this trend. So I think we've got to look at the negatives, but also the positives in terms of what happens with this trade war situation.
Mr. Mobius, let's talk about India. You've mentioned twice in this interaction already that, or at least my assumption is that my takeaway is that you like India. At these valuations, with the kind of twin deficit issues that everybody's been talking about, and the fact that we have a busy election calendar coming up, would you believe the levels give you comfort enough that we will tide over all of these uncertainties?
Yeah, well, the situation now is that India is on a reform track. Whether Modi gets stronger politically or weaker, it really doesn't matter that much, because whoever gets into power will have to continue the reform process, because the Indian public is demanding it. With smartphones and with the communications revolution, people really know what's going on, and they're going to be demanding more from their governments. So that's one thing. The other thing to remember is that India is a collection of states, individual states, that are competing each other for investment. That's a very positive development for foreign investors in particular, because they can pick and choose which state is going to offer the best deal to them. So for direct investors, this is a very, very positive situation. And I noticed that even in Mumbai, I was just in Mumbai, as you know, there's been increasing investment coming in on outsourcing, people coming in to do computer operations, call answering, etc. So I believe that's going to continue, and it doesn't necessarily show up on the trade figures, but it will show up eventually on the balance of payments situation.
Interesting. So am I to presume that you are looking at India a lot more actively than what you would have been otherwise, and whether you're looking at India very, very selectively, or do you believe the larger market could itself, over the course of the next 3 or 4 years, give even foreign investors better returns? Because I think that's been the bugbear of the foreign investor, that the rupee depreciation has led to almost negligible returns, if at all, dollar denominated.
Yeah, the initial reaction to these situation of a lower rupee and lower market, of course, people get fearful and they exit. But there are other investors, bargain hunters like ourselves, that get very, very interested when they see these declines. So I think you're going to see the overall market doing much, much better next year and going forward. And I believe that for individual stocks, there are going to be some big winners, which is, of course, what we're looking for.
What's your growth projection for India? Do you feel that our targeted growth of about 7.5 will be met? And on the other hand, one aspect is crude oil prices that are really important from the twin deficit point of view for us as well, and from the economic perspective. So how do you think these two elements are going to play out?
I think the growth is going to continue at a high level, about 7%, which is incredible growth for a country the size of India. I believe that on the price front, you're going to probably see higher prices for a whole range of items, simply because per capita incomes are rising in India. And of course, the interesting thing that is developing is with the reform in the distribution system in India, you're going to see big advantages for the retail trade and eventually for consumers.
Mr. Mobius, at this juncture, while we've spoken about a whole host of things, are there any one or two key risks that you see that could probably stall or worsen the selling route that we're in right now?
In terms of halting the selling trend, I believe something happening on the election front would have an impact. If, for example, you see a much, much stronger Modi on the election front, then the market will react positively. If that does not happen, then you'll have a negative impact on the market. So I think the upcoming elections are going to be quite significant, and we have to watch that carefully. But again, as I said, even with a temporary downturn as a result of maybe Modi looking weaker in the coming elections, the longer-term trend is definitely towards reform, and that'll be good for the country.
Mr. Mobius, you spoke about this being an opportunity where prices are a bit depressed to enter the markets right now. One particular space that is of late come under the scanner has been the financial space within India. Are you being able to garner whether or not this is the opportune sector to be in right now, considering the kind of sell-off we've seen, considering the valuations that have come out? Obviously, the problems still persist, and tackling of it is going to be more important.
We are looking at that sector simply because there are so many bargains to be had in the face of what's happened, the big downturn you've had. And interestingly enough, we're looking very closely at the non-banking financial sector because those stocks have really been battered down, and there will be survivors, and those that survive will have bigger market shares. So I think there are some tremendous opportunities there. Of course, we have to watch very, very carefully. We have to look at the balance sheets to make sure we're getting into very strong companies, but the opportunities are definitely there.
Obviously, you looked at countless such cycles. I think the fear in this NBFC space in particular that people have is that because of the higher cost of capital or otherwise, the growth trajectory which people had priced in for these companies will slow down materially. Having looked at countless such cycles, do you believe that the market is a lot more fearful than what it needs to be, or is this fear justified?
No, I think the fear is justified because with higher rates, many companies are going to be in deep trouble. companies that have weak balance sheets, that are have high debts, many of them will go bust, will not be able to survive. But the opportunity will be with the survivors, those companies that are not heavily leveraged, have strong balance sheets, and are able to withstand these higher rates.
One more question from my end, Mr. Mobius, and that is on how do you look at the next 3 years and from which funnel? Because a lot of people that we started speaking to have been saying that the last 5 years or the last 7 years in the Indian growth story belong to the retail-oriented spaces. So retail-focused banks did well, discretionary, consumer discretionary pockets did very well in India, so on and so forth. But the investment-led spaces did not do well, and with reason. And maybe now we'll see the re-emergence of the investment-led sector. So be it infrastructure, be it capital goods, or be it the corporate-facing banks, which hitherto haven't had the great time. Have you looked at those markets that deeply in the recent past, and do you kind of second that thought?
Yes, I'm aware of that and that thinking, but I think at the end of the day, even with the problems that you've had on the consumer side, the growth of the consumer companies, consumer-oriented companies, consumer-oriented sectors is going to do very well and probably better than the others. So you must remember that there is a revolution taking place in the retail sector in India, and with rising incomes, there are going to be continually great operations and great opportunities in that sector.
Got that. Mr. Mobius, it was a pleasure chatting with you this morning. Thanks so very much for joining us and sharing your thoughts and views with us here on the show. Appreciate it.